Everybody, Dave here in Freedom Investing. In today's video, we're going to go over the Fundrise results for 2020. How did they do during the pandemic for the whole year? And we'll kind of compare them against some other things, benchmarks as well. In addition, they also had some pretty exciting news that came out and some changes that they made. So let's go ahead and get started. All right, we're logged into my Fundrise account here. There's $15,888 in there. That actually had gone down because of one of the changes they made. I just decided to get out, but we'll talk about that here in just a second. I just got paid a distribution or dividend of $183 for Q4 of 2020. And right now my debt is at 83% and equity is at 47%. Like I've been talking about in previous videos, I've been trying to keep that debt pretty high because I want bigger dividends. So let's go ahead and take a look at the performance here and kind of compare it and see what's going on here. So here is the annual returns for 2019. I did a video on that one, and you can take a look at it up here if you want. The returns were 8.2% for 2019. And for 2020, we had returns of 7.5% in the middle of a pandemic. That is amazing. I think earlier this year during the pandemic, I said, we'd be lucky to probably get 5 or 6% of it, and they killed it, 7.5%. Let's just go ahead and click on that here to get a breakdown and look at the individual REITs. And so we got 2020 here. We had a decline in the East Coast REIT, E-REIT there, 10.6%, Growth E-REIT, 11.9%, Heartland E-REIT, 8%, so actually was an increase there. Income E-REIT, 7.4%, West Coast E-REIT there, 4.3%, Growth E-REIT, we actually had an increase of 7.5%, up to 7.5%, so that's pretty good. Income E-REIT, a little bit of a decline there. Balance E-REIT still ramping up. And then you get the E-REIT 5, let's see, there's 10, 14, Jesus, Roman numerals. That's still ramping up, so there's nothing in there. And we see Growth E-REIT 3, 11.7. That was actually a humongous increase from last year. So that was probably just one that was ramping up. And then Income E-REIT 2019, pretty big increase from last year. And we got the Income E-REIT 3 there, which is a pretty substantial increase as well from last year. Income E-REIT 5, which didn't even exist last year. We had an increase of 1.2%. And the National E Fund, which we're going to talk about here just in a second as well, 0.7%, and that was obviously a major decline from last year, but still 7.5% return for 2020 in the middle of a pandemic. I mean, there's nothing to complain about. I mean, I know people are probably saying, oh, 7.5, I can get that, out of the S&P 500, I can get that out of the QQQs. I mean, that is not an apples to apples comparison, all right? That is the stock market. That's the technology, all right? This is real estate, okay? So let's go ahead and compare that against some other real estate. I mean, it's not necessarily an apples to apples comparison, but it could be two different types of apples comparison, right? So here we're looking at the VNQ on Finviz, and this was taken literally right there, January 1st, okay? And the VNQ, the Vanguard VNQ is made up of a bunch of REITs, a ton of them actually, and so this is just an ETF full of a bunch of REITs. Well, guess what? Look at that. Performance year to date, 8.47, minus 8.47%, okay? That's not even a positive number, all right? So that's a minus 8%, where so we got a positive 7.5% out of Fundrise. This is a good thing to bench Fundrise against. What else can you really benchmark Fundrise against? Now, granted, like I said, this is not an apples to apples comparison. It's more of like having a Granny Smith and a Washington apple or something like that. Two different types of apples, but they're not quite the same. Let's compare it against Realty Income, all right? This is our beloved freaking Realty Income Corporation, all right? Our monthly paying, dividend aristocrat, all right? REIT here. And look at this here, minus 15.5%, okay? I mean, there's nothing to complain about with Fundrise, all right? I mean, I know a lot of people complain about it, the returns suck or whatever, but 7.5%, all right? All right, so we're looking at my portfolio here, and after comparing Fundrise against those other, apples to apples comparisons out there, Washington State Apple versus the Granny Smith or something like that. I mean, Fundrise just literally killed it, 7.5% return, compared to Realty Income or even the VNQ, Vanguard VNQ. But the biggest complaint people have with Fundrise is the lack of liquidity. All right, that's what I keep hearing. I hear that in the comments with all my other videos. It's liquidity, liquidity, liquidity. They were pissed off they couldn't get their money out, or they had to pay a surcharge to get their money out. Well, guess what? Fundrise is addressing that. So we'll talk about that here in just a second. We're looking at my portfolio here, and this is what's basically in all of the different E-REITs here. And you notice that there is no national E-fund in my portfolio anymore. Yes, they did offer an early out back in November to get out of the national E-fund. So I took that opportunity and got out of it, all right? So it was like a one-time deal. They were gonna consolidate all their national funds or their those E-funds or whatever they're called. They had a bunch of them. I was only in one. I was in the national E-fund. They actually offered a one-time grandfathered, hey, you wanna get out? We're gonna let you get out and we're not gonna charge you a penalty or nothing. So I got $1,700 out of that fund. And the main reason I got out of that E-fund is because I didn't wanna deal with that K1 anymore. So this year I will have a K1, but that's the last year I'm gonna get a K1. So no more K1s, I'm out of that. That $1,700 I actually did not put back into the platform. I actually went into my dividend portfolio. If you wanna look at my dividend portfolio, take a look at that up here. I pretty much do a monthly video on it. So these are all of the portfolio positions right now, and like I said, that national E-fund is gone, but there's an addition of this interval fund here that is brand new, and let's go ahead and talk about that. So just recently, Fundrise introduced this Fundrise Real Estate Interval Fund here. I'm not gonna read everything on here. I'm gonna try to read just the things that are important or something like that, but it is pretty exciting. A new fund to become our flagship fund, aiming to provide investors with greater diversification, lower overall costs, and improved access to liquidity, okay? So they listen to what people say. They're tired of people complaining probably about the lack of liquidity and the reason why they hit Fundrise or something like that. So they're trying to address that. Key takeaways: new Fundrise Real Estate Interval Fund to become flagship fund, aiming to provide investors with greater, okay, that's just what we read up above. No action is needed. New investments will automatically be allocated to the interval fund based on an investor's account level and plan type. We're excited to announce a major upgrade coming to your portfolio this year, which it's already active now. The launch of the interval fund, new flagship, blah, 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 powered of core investment portfolios going forward. If you've been investing with us for a while, then you know that we are consistently working to improve the overall Fundrise experience, all right? Using technology to reduce costs, cut out unnecessary middlemen, and make investing simpler and more efficient. As a result, we've created an almost entirely independent ecosystem built around our proprietary investment funds, which acts as the building blocks to each investor's portfolio. The funds are unique to Fundrise platform and designed to be seamlessly connect our technology platform or other investment strategies. This means that unlike most other investing apps where regardless of which one you choose, you are ultimately investing in the same subset of underlying stocks or in index funds, when you invest with Fundrise, you are truly investing in something different you cannot get anywhere else. Over the years, we have continuously pioneered new investment models, working through and various complex regulatory processes to create first of their kind investment opportunities that are specifically designed to offer a growing community and individual investors. Today, we're over 150,000 strong, better access to institutional quality investments. We are therefore pleased to announce that after nearly 2 years of work to make it possible, we expect to launch the Fundrise Real Estate Investment Fund as core part of our investment allocations beginning in January. Like I said, it is already active right now. I'm actually in it. Let's go ahead and look at some of the key things here. What makes it different from our other funds? It is bigger. The interval fund has a target initial offering of $1 billion with no cap on its initial offering capacity. This means the interval fund is capable of holding more assets than our other funds, which should translate to greater overall diversification and with a single investment. It offers improved access to liquidity. The interval fund will offer quarterly liquidity in the form of quarterly repurchase offers with zero penalty or cost associated with liquidating liquidating interval fund shares. Additionally, the interval fund is required to hold a minority of its assets in liquid securities in an amount sufficient to meet its stated quarterly repurchase threshold. So that's part of the reasons why it's a little bit bigger there, and we've talked about this in other videos. It's part of the reason why they didn't have liquidity in the past, because all those funds are pretty much in investments, all right? So they're required to hold some cash here for liquidity purposes. That technically should really draw down some of the returns, but it is what it is. You want liquidity, there's a cost to that, right? It prices daily, unlike some of our other funds that generally update their net asset value, NAV, on either a quarterly or semi-annual basis. The interval fund has a daily NAV pricing with purchase price and repurchase price for shares adjusting to match the fund's NAV. All the funds you currently enjoy, we expect the interval fund to become core piece of our investment portfolio, with an investor's allocation being based upon their individual account level and plan. Let's see here, low fees. The interval fund will have the same 0.85 annual asset management fee as our other funds, with no additional performance fees, carried interest, or promote. Whatever promote is, not sure what that is. Quarterly distributions, and investors should expect to continue to receive distributions following the end of each quarter. The dividend reinvestment preference. Okay, so means you can have it reinvest the dividend if you want, or you can take that money out and then reinvest it how you want back into the platform, or you don't even have to reinvest it if you don't want to. Regular asset updates, track your performance, and watch as we acquire, improve, and operate properties across the country on your behalf. Hassle tax-free reporting. This is the best part about it, all right? Like many of our other funds, interval fund intends to elect to be treated as a real estate investment trust, REIT, for tax purposes, so investors should expect to receive a 1099 DIV. So that 1099 DIV is obviously unqualified dividends, but it is not a K1, so that is a step up in my opinion. So I'm not going to really read these frequently asked questions here, these FAQs, all right? What is an interval fund? How does the launch impact? You know, what is the blah, blah, blah? I'm not going to read that stuff. But I'll put this link right here down in the description if you want to take a look at that. You can directly invest into this fund, okay? Now it's kind of funny how you get there, but if you click on this right here, it'll bring up this, and then you can go to Fund Details, and you can just go to this link right here if you want at the top. All right, I'll put that down in the description as well. You can click on Invest here if you want to invest in this fund. And then you have the option to invest in the fund right here. Now granted, right now, the minimum is $1,000 to invest in this. And I've talked to the guy, you know, and he says it should be less than $1,000, but it's not quite working for me for some reason, so I don't really understand. So what I ended up doing was just making a standard investment by going up here to Overview, and then did Add Funds. And when I clicked on the Add Funds, I just went ahead and added in whatever my last dividend was, $180 something, so $187 here, $183 or whatever it was. And it tells you, hey, it's going, you know, 162 is going to interval fund. So I don't know how you invest directly in the fund less than $1,000 at this time, but I mean, still you can get into it right now. Obviously it's kind of a work in progress. I just got into it myself, so unfortunately I don't have any more information on it. I don't know how the distributions work. I don't know how the liquidity works or anything like that. So I just wanted to bring some of that information to you. It is pretty good change that they made, in my opinion. Now obviously it's a work in progress. It's not really, it's so new to me that I don't even know everything to bring to you. I just wanted to read directly out of their documentation, just in case you're looking at getting into Fundrise. There's, you know, you have information available to you. So let's look at the transactions real quick here. So just to look at the transactions here, I've been adding in, you know, $60, $50, $50, $50 here and there. That is the National E Fund redemption that I had there that did not get reinvested back into the platform. So all these other ones here, these $50 basically come out of my lending club. So I am reducing that lending club, which is still about $1,400 left in there. That will be going into Fundrise as well. There's that dividend payout that I just had there, $183. I elected to not reinvest dividends with Fundrise anymore. So I take the distribution out, it goes into my checking account, and then I immediately turn back around and then deposit that money back into Fundrise into the investments that I want to invest them in. And that's specifically because I'm trying to raise the debt up because I want more dividends. And right now I'm going to be trying to get more money into that interval fund there. So there's the interval fund there. Obviously that was just in my supplemental income plan, but a lot of that went into that interval plan there, or interval fund plan. So I'm actually pretty excited about that. So I pretty much try to always do at least a quarterly video on Fundrise. If there is any other news that's I think is important, I will put a video out, you know, mid-quarter or something like that, or when the information comes out. Fundrise, in my opinion, they killed it. 7.5% return this year, at least for me. So I don't know what you had out of your platform. Go ahead and leave a comment below on what you had on your returns for 2020. I'm kind of curious to compare mine against yours. And if you have any comments, questions, or concerns, go ahead and leave a comment below. Hit me up on Facegram. You know, you can shoot me a message if you want as well. Until next quarter, let's go ahead and end the video here. So if you're new to my channel and you know you're interested in Fundrise, go ahead and like and subscribe, and we'll see you in the next video. Thanks for watching.